Well, I'm Matt Carnes. Thanks, everybody, for joining us. I am the founder of Greenwave Advisors, which I founded 10 years ago. Prior to that, Greenwave, we provide research, due diligence, and other various consulting services. We're also an affiliate partner of Stonehaven, not to be confused with Stoner Haven. And through Stonehaven, we are able to raise capital. I'll let each of the panelists introduce themselves and their background.
Hey everyone, my name is Mina Mishriki. I'm a partner and head of investments at Merida Capital. We have about 250 million of assets under management currently. Used to be a bigger number, but that's currently where it's at, and have about 70 portfolio companies.
I'm John Darwin, managing partner of Luminous Capital. We've been around since 2019, myself in the cannabis industry since 2015, and formed out of operators, an operator-centric approach, but with now just private equity investing. Historically have invested in ancillary as well as plant-touching operators, and now looking at deals within a credit fund and all U.S. plant-touching operators.
Hi, Brett Finkelstein. I co-founded an investment fund in 2015 called Fido Partners. Started investing full-time out of that vehicle in 16. Fast forward, we made about 35 investments, mostly ancillary, mostly early-stage venture companies, anything that's kind of in the cannabis economy today. So if I had a whiteboard, there was anywhere from lab testing to data to POS companies, anything that we believed was mission critical to prop up this cannabis economy. We're activist investors by choice, and we keep moving our business thesis forward, and we're looking for more stuff in those sectors.
I'm Heather Malloy. I'm the CEO and founder of Speedwell. We launched a fund about a year ago, and we are just about fully invested on our first close. We're probably doing a second close in November, so hopefully have some additional dry powder. We've done virtually all private deals, and I've been really thinking about where do I think supply chain is going in the future, and what do I think about the market and how it might evolve kind of away from the MSO space. So I don't really have an elevator pitch for our portfolio yet, but it all makes sense somehow. And prior to that, I ran mergers and acquisitions at TerraSend, and I've been in the space for about 10 years.
Awesome. So the public markets, the cannabis stocks have taken a beating over the last few years. Have the private stock, privately held companies, how have they been valued relative to the public markets? Have they been, commensurate with the decline?
I'm happy to happy to tee off here. So, I think it's very interesting looking at cannabis valuations where it was a massive premium to be public for a few years, and then started to decline, and now it's very much a premium to be private. I think being able to have people look at your business fundamentals and not pull up the stock price is valuable. Frankly, it's how we've looked at all deals from our side, so it doesn't change too much, but as much as everyone wants to say they're a fundamental investor, you still look at what the price is and what the price is that day. And that makes it difficult. It makes it harder for, especially non-institutional investors to understand what's going on with the company. And, I think from a valuation standpoint, there's been more knowledge, but still not enough around the things that can cause these public company issues. Toxic financings, ELOCs, things that can press down the value of the company on the ticker, but not change the intrinsic value of the company. So a lot of those things that happened in the Canadian boom seem to be trickling off a bit, and we'll see if valuations kind of reset. But I think however they do, it'll be with more knowledge from all the investors.
Yeah, fundamentals are still strong throughout the industry. I think there's a disconnect between private valuations and public valuations. Early on, I think all of us probably had FOMO, and I think now we have just JOMO, joy of missing out. And I think we fueled an industry of valuations that the industry was going to keep going forward. And I think that the compelling transactions now are really happening in the private market, to me. I mean, the public markets are also priced a little less frothy than they were. Demand for product is up, fundamentals are up. I mean, the balance sheet's a little challenging on the debt side, but there's still that access to capital in some states and some issuers that are, still compelling markets for us.
I guess the only other thing I would add is, so when I'm looking at private companies, I typically think about who the exit opportunity might be. So I might give a company credit if I think that they'll have a takeout away from an MSO. But otherwise, the MSO valuations I think are depressing private company valuations if that's like the likely only exit. And so I think that it's definitely part of our analysis, but many of the companies we look at when we look at the competitive set, they're not actually cannabis companies when we think about like their comp set. But I think that the public markets are also quasi-private right now. Like, I don't think these companies are really public when they're trading $25,000, $250,000 a day in volume, and their prices are getting pushed around on no volume. It's like, I mean, it's
100%. It's not really fair to compare it to the public markets, the private, because of that. So there's obviously been a liquidity crunch for several years now, because for a whole host of reasons. How have you dealt with any funding gaps? Have your portfolio companies come to you asking for more money, or how are you resolving that?
I think it's fair to say everyone needs more money, and everyone asks, and it's been difficult. I think we've been fortunate because we had some monetizations prior to everything kind of falling apart. So we've had liquidity by recycling some of our public positions into private companies selectively. It's always a difficult challenge, especially if you're holding some of the top tier MSOs and you think that those stocks are going to gap up significantly here in the near future with rescheduling. So your cost of capital is significantly high. So the calculus becomes, do I want to sell, GTI stock, for example, and put it into a private company? Well, I have to have confidence. If I think GTI stock is going to double and triple in the next couple of years, and it has liquidity, and the private company doesn't have liquidity, that private position is going to be, a much higher return over the long run, taking into account the liquidity discount.
You don't all have to answer these questions, because we have a lot to cover.
I think that, obviously price compression. I think structurally when we would early on investing and wrote a stock purchase agreement, we wanted certain rights about add-ons and tag-alongs and giving us more optics to the industry. If the companies are where we see them and they need more capital, we definitely followed on throughout the years. I think now it's a little more challenging as far as Mina said, recycling the capital, seeing what other opportunities are out there. I mean, we would like to see probably more M&A to get to a liquid market. The public markets obviously are there for on the debt side, but I think and private credit, as John's mentioned. But I think the valuations are depressed and they're more compelling. So you could really recycling companies, and if you believe in the thesis and you want to get bigger in the name, you should put money behind the winners.
Okay.
Yeah, I would like to be able to support all of our portfolio companies. I like all of them. I'd like to be able to do more with them. For some of them, actually, it's not a fit for our fund, but like with my personal money, I'm helping with working capital financing. So like I'll put up money to help them manage inventory flows. And I'm happy to do that for this group of operators.
So if we go back to like, say, 2014 and we look at the industry, probably the biggest risk was a federal shutdown. Fast forward to today, where do you consider the biggest risk? Assuming you still, everybody has bullshit repellent and you're able to.
So I think that the biggest risk to the industry as structured right now is the hemp market, because the hemp market is picking up with no federal limitations, this loophole in the Farm Bill, and whether or not it goes away. And you've seen like just a rapid proliferation and growth in that space. And it's not really, I don't think, technically investable, but depending on what happens regulatorily, that's a way easier market. And so I think that the moat that a lot of people thought that we had has been like really fundamentally chipped away over the last 36 months. So that to me is like understanding how the cannabinoid market is going to come together in aggregate in a regulatory fashion, which I want. I would like cannabis products to be available for sale everywhere, that they're safe, tested, age gated, and going to the appropriate consumer. Like, as a participant in the market, that's what we all want. But as an investor, we've all been investing in this regulated framework, and then this whole other market has just developed. So you have the black market, the gray market, and now like there's so many disparate markets, and they all hopefully will come together.
Yeah, I would just dovetail that by saying just the lack of regulatory clarity. Everyone wants clarity. We don't really have, we're obviously more of a investor in the legal regulated markets. Some of our portfolio companies are playing in both the legal regulated markets and now this gray area hemp-derived market. I honestly don't care which way it plays out as long as I know what's going to happen, and nobody knows what's going to happen, right? So from a risk perspective, I'd much rather be a company that has that's playing in the legal regulated markets and has the potential to go into the hemp-derived markets than to be fully exposed in the hemp-derived markets and maybe getting shut down at a state or at a federal level with the Farm Bill coming up.
Yeah, I think I agree completely with that. I think one thing that I'd add to it that might be a slightly different response. I wouldn't say it's the single biggest risk, but it's one that I've talked about a lot and I'm seeing is we need more talent from other industries coming into the space. That's young talent, that's seasoned executives, not just the capital. That's all anyone talks about. But if I look back to 2018, 2017, there was a lot of extremely strong talent coming to the industry, a lot of hype around it, and I think it's going to hurt everyone if we're not able to attract that talent. I know it's a derivative of what capital comes in, but I view that as a big risk for the industry because it's real, and we're seeing it with the executive turnover at public companies right now, and seeing it with, frankly, not as many emerging big players as there should be.
Not to mention a lot of financial restatements, and I think that's a function of talent. So if any of you were to put new money to work right now, where would it be? And what subsector?
Well, I just did 4 deals. So we're doing a data and analytics play right now, and then we've done 2 hemp-related deals, which are non-intoxicating, like supply chain related, and then I did a brand play. So I think one of the things that's interesting, and looking at the data and analytics, when I looked at MSO-owned brand sales and then the velocity of sales on independent brands, you can actually see that there's a very compelling argument for MSOs that are running vertical to add out-of-state brands and pay licensing fees because those products move at much higher velocity on shelf. And I think that that's getting lost with all the product swaps and the MSOs like working with one another, which I understand the reasons that they're doing that. There's not a lot of capital in the space, and so you have to take advantage of whatever competitive position you have. But I think long-term brands actually will matter. And so we did a brand deal, and the reason we were able to do it is because we actually were able to find data that showed us very meaningfully like how that brand performs relative to these MSO brands. So I'm excited about the CPG metrics that are kind of starting to proliferate in the cannabis space. I think you're going to start seeing, I would hope that you start seeing dispensaries use metrics and data for their purchasing decisions instead of buyers having all this power, because one of the biggest problems we always hear about is working capital is locked up on everybody's balance sheets, and dispensaries are sitting on inventory that's not turning. They should be turning their inventory, I think, like 12 to 15 times a year, and they're turning it like 5 or 6. So there's all this wasted money that everybody needs capital, and it's all trapped on their shelves. And I think that's these buyers that are, traditionally have a tremendous amount of power in the supply chain. And now that you're going to have data available, these decisions should really start to shift. And I would expect you'll start seeing changes in retail performance. I would hope so.
Anybody else?
I would say that for us, it's always been leadership, people focused. I think the portfolio, if you're looking at new investments, if it's strategic, if it's going to be like a bolt-on or something that could help the portfolio move forward, but I think it's really going to come down for us structurally as term sheets are going to be written, I think more kind of debt protecting us on the downside. I think all of us here have a wider lens than we probably had in 2014, 15. We've seen what the next big thing was going to be. We probably bit off on that and also maybe passed on a lot of them. But I think it gives us, great optics to the industry to seek out the new investments that we want, but also keep moving our current portfolio. And maybe it might be, good product, good technology, good service, and just a bolt-on. But as like John said, maybe it's just like the management is not there yet because we don't have the execution talent in the industry that we could move this industry forward.
Okay.
So, I think for us, our fund strategy is pretty specific. We target debt deals. I think as we look at debt, though, we take a slightly different approach. Not always bigger is better. Maybe I'm wrong on this, but I don't think the winners have been defined yet in cannabis. There's certainly a top tier of MSOs, but they attracted the early wave of capital. That's going to be minuscule compared to what institutional capital in the U.S. can do for some of these companies. So getting with the right operators where we think whether it's corporate governance, ability to execute all of the things that check the box for us to be able to take that institutional capital, we really like those opportunities. So we're looking at what I would say, it's a small subset, but primarily private, retail-focused, multi-state operators that might have flown under the radar, but ones that we think could be the next wave of, the top guys.
I would say we're probably a little different, I think, than most funds. We're a little bit more equity-minded, earlier stage. We are kind of a part mini MSO, part fund. So we'll start operations in a lot of states and have a conglomerate of single state operators that we control and manage. And so that's one area of focus for us. It's hard for us to invest in operators unless we kind of get involved very early. So that's one thing that we focus on. Couple other quick areas of themes that we like: medical. We're big investors in the medical theme. Industrial hemp applications, not to be confused with intoxicating hemp, which unfortunately has suffered from a lot of confusion with intoxicating hemp. I love hemp, but I love it for door panels and textiles and flooring and construction. So that's one area that I'm particularly most excited about in the long term. And then biotech applications. We just love anything in the seed genetic space. We think that's going to be very disruptive to antiquated clonal methods of growing. And then probably my most exciting portfolio company is a company in the biosynthesis space that has some government backing. So
Yeah, 100%. I think there's going to be a lot of excitement around when Schedule 3 happens and what that will mean for the medical market. It will be recalibrated and redefined, and I think there'll be a lot more interest in the sector. John, to your point about institutional capital coming in, what do you think is keeping institutions out and on the sidelines? And don't say 280E or Schedule 3 or anything related to any type of regulatory change.
Okay, won't say that. And frankly, the one thing I will say about that is I don't think that opens up the floodgate. All those things you just mentioned, no one really cares about 280E. They think it's going to be a great opportunity for the operators. Institutional capital is looking at primarily, when we say the large majority of being in a federally legal space. You got to think these are people who, if they're a trustee on an institution, they're taking personal liability around the investments that are going from that fund. So there's a lot of consideration around the legality. I think looking at more strategics that are investing in federally compliant ways. Things such as we saw, like Kraft Heinz has entered the space, some of the things Tilray's doing now as well, and looking at those as paving the way. The more of those precedents that come, I think the more institutional capital will get interested. And then, frankly, I think also, again, I'll stress corporate governance. being able to have strong financials, but it's a long process for institutional investors. So, the people that I can say are looking at it and starting to understand the space today are still, getting smart up on the space, and there's not a rush by any means.
What do you think about the illicit market, or any? Well, you could answer that last question, but I'm just also curious what you guys think about the illicit market and what impact that has on the mindset of institutional investors.
I think the illicit market creates a lot of fear for institutional investors, but I think the number one factor is uplisting.
You couldn't say that. You're not allowed to say that.
Oh, I'm not? Okay, well. Nobody gives a shit until there's uplisting. So, no,
Because assuming that all comes to fruition, say tomorrow we have uplisting and everything.
I think for institutional investors, they all have a vice clause, right? And the vice clause is rendered null and void with the word that I can't say. So, until there's liquidity, people see the opportunity, people see the upside. People, frankly, see blood in the water with, some of the valuations and the opportunities that are at hand. But, until there's a clear path towards liquidity, it's going to be challenging.
Yeah, I was going to say, if stock prices were over $5 and you could custody them anywhere, I think people would be in it. But when all the prime brokers told the funds that they had to get out or they weren't going to have custody for their billions in assets, that was the fundamental, that was the tsunami wave getting ripped right out after institutions had come in. So I think if anybody would just start, if real institutions would start offering custody of the shares, I think you would have institutions come in.
Yeah, I think I agree with everything. Custody certainly huge, but I also think optionality. We have 50, 70 people in this room, and there's a couple hundred people outside. But there's other options and other conferences and other asset classes that people are looking at. That maybe this one that they're waiting for something, and maybe all the things that we can't say that you told us not to say needed to be happen. But I also think there's optionality in other asset classes. In biotech tech, if you bought NVIDIA stock, you could sit home and you don't have to, screw around in cannabis. So I think the optionality of what we're doing on a global level, certainly on a national level, is not really enticing yet until there's this path that we can't talk about, but also maybe huge successes. Someone you could point at.
But wait,
this guy's a billionaire.
How many people in the room are invested in MSOS or have a public stock? Okay, that's part of the problem. All of you guys need to buy the stock. So everybody that comes to these industry events isn't holding the stock, and everybody's bemoaning that nobody's investing the stock, but none of you are buying the stock, and the stocks are so cheap. So you could go buy MSOS, and then that's going to result in them going and buying the underlying stocks, and there's no volume. So if everybody that was at this conference literally went out and started buying 100 stocks a day, 100 shares a day, all of a sudden the liquidity flows shift, but nobody in this room is doing that.
Well, and I think one thing I would just add is even MSOS can't buy the stock, and that's part of the problem, right? And it's creating all sorts of weird issues, synthetic shorts, hedge funds taking advantage of that because there's no liquidity. And so really there's I can't stress enough, there's a massive unlock when MSOS can buy the underlying stocks.
So I'm going to put on my buy side cap because I worked at a hedge fund for a number of years, and I was thinking, if I were to pitch a stock to our portfolio manager, what would they come back to me and say? And the number one issue I think that I would get the pushback is, dude, the illicit market is crushing sales. The sales growth has pretty much declined in an existing market after maybe 1 or 2 quarters, and it's 2%, 1% flat, quarter over quarter.
But don't you think there's an unlock with 280E going away? Because the illicit, everybody that's in the illicit market now is doing that because they can make money there. And everybody in the legal market is not making money because they're paying 280E. And if 280E goes away, then why wouldn't everybody just go into the legal market?
Well, that's a good point because it will probably have an impact on pricing. And there's a whole host of things that could happen. And, and then interstate commerce. I'm not saying that the picture is bleak forever, but just where we are right now, it just seems a little.
Well,
But I
and-
think that we're also talking about, like, you're highlighting MSOS, you're highlighting maybe low
Right, and
price
we're-
stocks. There's a whole area of ancillary companies that are in the space, either directly or indirectly. And I think that maybe someone looks at the industry, or you pitch your colleagues back at your hedge fund days, and they say, "Great, Matt, I see the growth, I see the demand for the product, I see fundamentals, but I see a balance sheet that could choke me."
Right. Yeah.
Well, and I think, Heather, too, I guess maybe one counter to that is 280E hasn't gone away, but the MSOs are pretending it has. And even then, it's still not doing it.
Yeah,
So.
I mean, a rising tide is going to lift all boats, and there's going to be a shitload of cash that's going to be available for everybody.
Well,
Even
I
us.
think like all this that we can't talk about that Matt said is the driving force of why we're in this room, because that's just another lever for stock prices to rise, another lever for more money being spent out of the illicit market into the legal market, and then there'll be more money around to invest in stocks, privately companies as well. And I think that we are waiting for that.
I would just add, I think the illicit market impact really depends on which market you're looking at. I mean, we're all pretty doom and gloom up here, but like Missouri's crushing it, Maryland's crushing it, Michigan is crushing it now, New York is turning around.
Yep.
And a lot of that is a direct result of regulatory changes, right? California right now, wholesale prices are in the toilet. A lot of that has to do with the illicit market. That's where all the illicit market flower comes from. It's also where all the intoxicating hemp products are coming from. Newsom cracks down on the intoxicating hemp market, but nobody's talking about, doesn't really change anything in terms of export into other states. So that's going to continue, and until those loopholes are kind of addressed, it's going to have a massive impact. But
So does that mean you were going to propose Glass House as your buy?
Well, I mean, I like the.
You might have to put a disclaimer on it.
Yeah, exactly.
I mean, Glass House is a perfect example of Newsom comes out with this, and they're still going to go into the intoxicating hemp market. So,
Everything's short-lived, though. I think. I mean, eventually.
But let's just put round numbers to it. The legal market is about $30 billion. The intoxicating hemp market, by some estimations, is about $30 billion, right?
But I don't
a few
believe
years
any of the
ago,
data
those
on the hemp
combined markets were only $30 billion. So the market's doubled over the last couple of years. It's just it's going into different places.
But I think we're all kind of saying the same thing, but I think that's where the opportunity lies for us and people that are listening, is that there is this friction in the industry, and kind of once it gets unfrictioned or kind of loosened, you could really invest and think about the market as a efficient market and an asset class that cannabis at the end is just the ingredient, and we could get normalized.
And one last point I'd make before we have to turn it over to Q&A is that consensus estimates do not reflect full legalization. So I think, maybe it's where we are now, the growth from where we are now for the next 2 years, that would not include any new states that came online. So it really is, the sector is very much undervalued, in my opinion, relative to where the growth is.
Right. I think, if someone listens to numbers or reads analytics from other companies, I think that if someone would say how much cannabis is sold in the U.S., I think the answer is all of it. That's the answer.
I think are we out of time? Okay, Q&A.
Is there any interest in packaging, in child-resistant packaging and investments?
I think it's a challenging industry. I think there's a lot of companies doing it. I think it's really much price compressed. There are some leaders that do custom packaging. I mean, as far as looking at it for a theme for investment, I mean, it's not something that we would look at right now.
I think generally ancillary is good because you don't have some of the hamstrung issues that you have in the legal markets. I think if your packaging is made out of compostable hemp, then that's really exciting.
But if that's, okay, so if somebody's trying to go there, there is an interest for that. I'd like to talk to you.
Yeah, David Nye from Canada. Thanks very much for the presentation. Very interesting. In Canada, we have different constraints. The excise tax regime has really stifled our industry versus your rescheduling, federal legalization challenges. And a lot of the industry has looked to the global markets where there is more stability, there There is more certainty in regulation. Australia's market's booming, Germany's increasing, Poland, many other countries, in Europe especially, UK, etc. I'm wondering on your thesis, I've been here for a few years, hardly any talk about global investment, global market, but I think that's an interesting play. Are you guys individually or through your funds looking at global investment? Is that something on the cards?
That was a question I was going to ask, actually.
I've spent a little bit of time looking at Germany, and like way back, I looked at Australia. But when I looked at the total addressable market opportunity and the complexity on the legal side, and if I'm not a native speaker, I have to go then learn like a whole framework and understand how my rights and enforcement and everything else works. And then when I kind of looked at the size of the market and the opportunity, it was just like way too early for me to like, it's like show me, don't tell me. And I think that a lot of those opportunities are very much tell me where you're going. And based on what we've all been through the last 10 years, like I just don't believe anybody's forecast.
Yeah, I think, in the global market, we're specifically investing in the U.S., but, I think part of my concern is as these new markets open up, it's just another hype machine and it gets people excited and then misses expectations. I'm going to China the back half of this month, and all last year it was how exciting the Thailand opportunity is. It's going to be the biggest market. That market's gone now. Doesn't exist. And I think you look at things like that can happen for all the issues that there are in the U.S. and in Canada as well. It's, the devil and we'll see how other markets unfold.
Yeah, I like exactly the devil. I think that the market here there's enough wood to chop for all of us, but I think that in internationally, the research part of the business and some of the other stuff, but I think like John said, we've seen so many deals of grows or pieces of paper in Macedonia, and like Heather said, it's just kind of far out for us.
Yeah, I just generally I would say the international markets are just a less mature opportunity.
Do you have a question?
Hi, Erin Kirk. I'm the new Cannabis Ombudsman for the state of Connecticut, which is the first such position in the country. And I appreciate Mary Capital because I know you're investing in our state and I know the principals involved, and Connie's a good friend. Matt's also from Connecticut. I know Heather's also investing in Connecticut. So I just want to plug Connecticut. We are kicking ass and taking names. We have a very limited market. I'm writing legislation right now. If anybody has anything they want me to get in front of the governor's office, I'm happy to carry that water. But I really am trying to really focus on the patients. The problem in Connecticut is they only allow the high THC to the patients. So it's not worth it for producers to sell through just to the patients. What are your thoughts on that? I'm trying to change that legislation. What are your thoughts on New England, a craft-centric region, I believe? I also am bar admitted in Maryland and DC, so I've written some legislation there, but I really am keen on Connecticut. I'd like your thoughts on that.
Well, we love Connecticut. We're opening our first two dispensaries here soon. Thank you very much for your support. Good. We're doing it backwards. We're not building we were intending to build the cultivation first. Unfortunately, part of the issue with that was some of the restrictions that Connecticut put on us to have a minimum size that was much bigger than the regulations implied, but we can talk about that offline. But in general, look, I think the Connecticut market is constrained from a supply side. But it's growing at a healthy and slow pace. So, the markets that are really challenged are the markets that are unconstrained and there's too many licenses and it just devolves very quickly and commoditizes. So, whoever's running the Connecticut program is doing it in a mature way.
But you guys allowed hemp as an input, right?
We've changed everything. We've reduced the packaging. You can only do 5 milligrams. It's not worth it. There's $1 a can on THC beverages. They've removed everything from the shelves, and October 1st they will bring them back. So,
But I thought licensed cannabis processors could actually input hemp for their processing. You could convert.
for beverages only.
Oh, I thought it was broader than that.
No, help me change that
Okay.
because we're bummed about that.
Hi, right? Okay, thank you. Speaking of beverages, my question. Your take on beverages and the alcohol industry kind of tapped into that in some of the different states, and also the brand play that might be connected with that as well.
I'm personally invested in a couple of beverage plays, and I have been for a couple of years. So I think alcohol. I think alcohol replacement substitute is like a humongous market opportunity, and I've thought that because women drink more alcohol by volume, and they want an alternative, and people don't want to be hungover, yada yada yada. And so I think that this movement is huge. And for me, it was anecdotal because my husband is like, I don't use weed, but he drinks 2 cannabis drinks a night. So. So he does. And so I think that beverages are the great normalizer, and I think it's the easiest way to integrate into country clubs and communities, and it kind of takes the scare off of the topic when people realize it's a healthier alternative to alcohol. So I'm a huge proponent for beverage. I don't think it's investable right now unless you're working with a group that's in the licensed regulated channel. So I think you need to be in in a licensed medical or adult use market as a hedge to what may happen, because you've seen so much disruption of the national supply chain with these regional beer and spirit or distributors. So I think state by state, it's been amazing and fascinating to watch. Like if Florida allows their stadiums to sell hemp-derived, but then you can't sell hemp-derived. Like I just don't know how all the distribution is going to work out. So what's amazing about it is if they can sell it everywhere alcohol is sold, then it's fantastic. But right now, that's very unclear. So it's the same thing we were talking about at the beginning, the regulatory uncertainty.
Yes, sir.
With emerging markets, as anything from cannabis now, innovation drives the market. Have you guys seen a slowdown in entrepreneurs deciding to come into the market and innovate because of the slowdown in available capital?
Yes. Period. 100%. And I think that goes to my big risk of I think we need to, collectively as an industry, and again, understand capital is a huge part of that, but being able to attract strong talent, whether it's young entrepreneurs or folks from other industries, is a huge focus of us in the industry.
But also, like Matt said, we can't talk about the 280E part. If that
can talk about it now.
Okay, if that goes away, I do believe you'll see more innovation, because there'll be more capex to spend on new things. Right now, like I said, I think everyone sells everything they produce, so it's going to be challenging to someone to rip and replace and do capex and saying, like, we're good. Like, my packaging is good, my lighting is good, my systems are good. But I think that, the thesis that we had to go in, when business gets tough and supply and demand and price compression, they'll look for innovation to make the market more efficient and effective.
And just to put things in perspective, just to how profound, and I'll say 280, I'm waiting to talk about. At maturity, the estimate for the U.S. cannabis market is about $100 billion. And I've looked back over the last few years on how much companies, MSOs, have paid in 280E relative to their sales. That's about 6%. So we're looking about $6 billion flowing back into the industry that we didn't have before at maturity.
Two more questions.
Okay. Yes.
Yes, Dr. Janice Makala. Question for you. Big Pharma, with the rescheduling happening, how concerned are you about Big Pharma entering the market, Big Tobacco even, with a sink being bought by a tobacco company?
Well, I think it's. I welcome these big industries that are coming and paying attention to our space. I think they see the opportunity. It's a massive opportunity. As far as how Schedule 3 will play out, which is obviously, I think most people agree is, kind of creates a cluster for how to regulate. There's a lot of uncertainty. There's never been a Schedule 3 botanical. How is the FDA going to regulate and approach that? I don't foresee the state programs going away. I know there's some folks in the medical space that say, no, all the distribution is going to go through pharmacies. I doubt that. I think what you're going to see is a bifurcation through form factors and an acceleration on the research and the clinical development side. And you might see, for example, big pharma looking to get into the pill game, but they have no interest in running a cultivation and selling pre-rolls. Like, it's just, that we just don't see. Big tobacco we see as an investor in some of our portfolio companies. That's interesting. And big alcohol, of course, we talked about before. And I think, big alcohol's involvement, may be the reason why intoxicating hemp stays around. Connecticut and their regulations is a case in point. My wife and Heather's husband probably should hang out because they have a similar approach to cannabis. Now, if we can just legalize mushroom gummies, then we'll be good.
One last question. Yes.
Sylvia C. with Salal Credit Union. Having been working on the commercial banking side for 10 years and doing a lot of work in California, I saw all the investment dollars that rushed into California and have gone away. They're just dissipated. They've been burnt. And I would love your perspective on how are you looking at California? How does anyone invest there? Where do you see that market going?
I have some California exposure, and I'm on the board of Gold Flora, which is so very large footprint indoor. I think that market is very, very challenging, but I think they have a shot because they're vertical and I think she's a good operator. And so it's a humongous market, right? Isn't it like the 5th largest economy in the world? So ultimately there will be successful businesses, but the regulatory environment there seems to really be making it very, very difficult. That seems to be the linchpin that creates a lot of problems for everybody there. And I think it's unfortunate when so many brands that start there, then they're like the only way to survive is actually to get out of state. So I guess my hope is that as things normalize, you do actually see a lot of these California brands that remain California produced and they are able to be sent across state lines. But given the disparate manufacturing, that's probably a longer road. But I think California has been where operational excellence has come from. I think it's where a lot of innovation has come from. I think it's where leading consumer products in the space have developed for the most part. Cultivation, I don't think can be beat there. So, I mean, to me, it's still like the leading market in the world for cannabis. It's just very, very difficult right now.
And seeing the operators, I mean, I watched operators waste money from the banking side. I have a completely different perspective. I can't believe the investors are letting them spend this money this way. Is there a change in oversight or due diligence on how, what went on in 2014, 2015, 2016 to how you're doing that now?
Well, right now, I think people aren't paying. Nobody's paying for anything across all of the supply chains. So, like, I talk to lawyers, and they're like, my top clients aren't paying. And then you talk to dispensaries or brands, and they're like, my top dispensaries aren't paying. Like, the amount of cash that's, like, trapped in the system right now is, so bad. Yeah, it's crazy. So I think that nobody can be spending foolishly right now because there's literally no cash to be spent. And yeah, those days, it was like we were all just trying to figure out what we were building. And so there were a lot of hype projects. People were really excited about things. Everybody expected growth to come. And really, if you didn't have operational excellence and you weren't really focused on standardization, SOPs, understanding your cost of goods, understanding your inventory. Like one of the biggest issues, people were talking yesterday about like, why isn't there ERPs in the space? And dispensaries right now, I talked to, they're like, well, I ordered 50 units, but only 18 were delivered. Like there's just like the lack of professionalism throughout the whole supply chain because of the varied constraints, which I think it's often because they don't have the cash to fulfill the initial order or they didn't have the packaging or whatever. So yeah, I think everybody right now has tightened the belt and people are behaving much more responsibly.
I would just say, I think it starts with the regulators. I think the OCC should probably talk to our friends from Connecticut and figure out how to regulate.
Well, it is the Wild West, that is for sure.
And one last thing I'll say is the survivors will benefit greatly.
100%. Well, thank you.